Good morning, everybody. Good morning, everybody. Today is the 25th day in the month of March 2022. All right, so quickly, as usual, check through the market, find out what the dominant sentiment is, what's going on in the market, if there are big stories, what is driving currencies, and then if they provide opportunities and how we can take advantage of these opportunities. But please remember, this is just a communication material. And nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is a more mixed flow, but we've not really had so much in terms of strong catalyst for the risk on side or the risk of side of hard currencies and assets moving in a disjointed manner. Right. I had this written down earlier. I said careful optimism in Europe. Yes, from the Europe side on the back of Russia-Ukraine tensions, right? Um, Ukraine top executive, that's the chief of staff for Ukraine President Zelensky, says that there's progress in the talks, the negotiations for the ceasefire, right? Clearly, so that's also a positive, but risk assets are not really excited on the back of that. Apart from that, we have, yes, Japanese yen has been falling across the board for a while now, right? We've had it coming down on the back of a couple of reasons. Number one, Japan as a net importer of commodities as well as oil prices, with commodity prices and oil prices rising as high, obviously pressuring Japanese yen. Apart from that, the BOJ has been a dovish one, meaning dovish despite hawkish tilt from the rest of the central banks that pressures the yen as well. Apart from that, we also have even the rising bond yields in the US as well, also pressuring Japanese yen as well. So all of those factors have been pressuring the Japanese yen for a while now, right? And we've seen in today's session, we've seen mostly more pullbacks on JPY crosses across board, right? Earlier today we had comments from Finance Minister as well as Bank of Japan Governor Kuroda, where he said that the yen, right, they prefer a more stable yen. And then basically what they're trying to say is the rate of fall in the yen has been too fast. Basically, they didn't say it in literal words, but basically that's what they're trying to say. And then obviously they try to draw bone that weakness that we've seen so far. So that is seeing JPY lead across the board. But the catalyst for weaker Japanese yen is still very much in play. But obviously after a strong rally, you should expect some form of pullback. And today being Friday, after strong weakness in Japanese yen for the week, right? Obviously, it's not a surprise to see some form of downside. GUSD is also weak across board. Not really in terms of major catalysts. The USD has really just been pushing and pulling most through the week, ups and downs and chopping moves. So that's not something we want to really leverage on right now. Oil prices are also seeing slight downside, right? There's been calls and calls for the supply of oil, right, from Western leaders, US and its allies as well. So there's also that, and that has seen oil prices, see some downside, right? IEA is also set to also release more oil supplies as well into the market. Obviously, with the increase in supply, that calls for lower prices or that causes lower prices across the board. And then the card is also pressured on the back of that, right? Generally, moves are lackluster. News flow have been less impactful, nothing really tangible there. And then if you look at it with a Friday, look at it, there's also a very light economic calendar in their head. It's not really a surprise. Equities are mostly flat across board, right? US equities just keeping their gains, but not really going anywhere so far today. Oil prices are also down, easing from the highs, but generally still overly supported. So there's also that to keep at the back of our minds. On the VIX side, barely changed, right? It's not moving higher, saying no fear. It's not moving lower. Sorry, it's not moving higher, saying fear. It's not moving lower, saying no fear. So really in the middle there. The bond market remains pressured. That has been for a while now on the back of rising bond yields because of the hawkish Federal Reserve. So there's also that. But so far, it's really found the floor, right? I think 2 days ago, around the 112.30, 122.30 there. So there's also that to pay attention to. The line index is choppy for the week. I said moves in markets so far are mostly disjointed, right? Because there's not really been, a lot of catalyst flowing right now. Equities are still holding on to their gains, right? But on the other hand, you look at the safe haven currencies, they are leading the FX majors. JPY the strongest, CHF also doing well. And on the weak side, you have the Australian dollar pressure, right? You have the card pressured as well. So all of those things, dollar is also pressured as well. So all those things are not really giving us a clear approach. I wrote here, I said the strength in Japanese yen is mostly pullbacks, right? Which may extend into the weekend. But remember that the reasons for the initial downside are still very much in place. So that obviously tells us, in as much as that is still what we have right now, it's not something to jump into and just forget oneself there. I said heading into the weekend in a mixed environment, exercising some patience may be a prudent approach right in their head. Clearly on the calendar, we don't really have much going on. Let's just look across, but like I said, look at the equity space, for example. You notice this, for example, on the JPN side, nothing really. I mean, this is just choppy ups and downs, nothing really much going on here, right? On the Europe side, I mean, this is barely going anywhere. This is 25th of March. That clearly tells you the kind of environment that we have so far. On the US side, yes, holding on to gains from yesterday, right? Holding on to yesterday's gains, massive gains. But in today's session, we're really trading at flat levels, right? So really nothing much here as well. On the VIX side, nothing, barely going anywhere. Holding on to the lows or the flow we found in yesterday's session so far, but nothing really much going on there. On the oil side, like I mentioned earlier, we're seeing some form of downside, but even that has not really been massive compared to the kind of moves that we've had or the kind of upside that we've seen in recent trading sessions. So there's also that to also pay attention to as well in the day, right? So far, we've had just a little bit of downside falling from yesterday's, price action. But that said, nothing really tangible here to pay attention to on the back of that. You look across the other equity space. Like I said, this is the downside we've seen yesterday and today's session, but compared to the strong strength we've seen over the last couple of sessions, right? Clearly nothing here. And now so far we're back at support levels, going back to this is 1110. I'm sorry, 110 rather. And you look at it, it's also we've covered the gap from early jump on Wednesday, on Thursday morning, right? We had an early jump, we've covered that gap, and now we are finding support at yesterday's lows, as well as late American lows on Wednesday, very close to the highs going back to 21st of March as well, even way back as well as 10th of March. So nothing says that we could not see some form of pull up from here, but because there's not so much to latch onto right now, I'm being much more prudent on the back of this. The dollar index is also pressured, in the day, right? Yes, downside we're seeing into the session, but in terms of catalysts, nothing really major. Yes, we could say pullbacks, but nothing really tangible. Although you want to also be very concerned about this overall previous support on resistance, right? So the fact that we have downside in today's session, we've come back to retest it. Nothing says we can't see continuous pullback on the back of this, right? But in terms of conviction on the back of that kind of move, I don't really have much, on that particular one. I'm more, I'll be more prudent, right? Instead of trying to jump into what we have on here right now. So that said, you look across, I think that's that about that for here. The bond market, I think I've mentioned the bond market, still overly pressured, right? Although in recent sessions we found some flow, I mentioned the bit, we found some flow around the 112.30, right? Earlier in the week, I think this was on Wednesday, but so far in today's session, nothing much going anywhere on today, 25th of March. Across the FX space, yeah, we talked about the Japanese yen, right? As leading the FX majors. But one thing you want to also know is the downside you're seeing on the other pairs or JPY crosses, right? Other currencies against the Japanese yen, it's just merely pullback. You look at the kinds of move up that we've seen in these pairs. I mean, this is just a drop in the sun, right? Nothing really major in terms of the strengths in Japanese yen that we've seen so far. So in as much as yes, we could talk about the strengths, but it's not really something tangible you want to also latch on to. So there's also that to pay attention to. Across board is really likely the case, right? Going into next week, I would like to see this pullback some more. For example, pairs like AUD, I want to see a lot more pullbacks. Right? If I can get pullbacks towards maybe this round number around, this is around 90.5, previous supports, previous resistance around here, right? Going into next week, I would like to also get back long, right? I'm looking to still, buy JPY crosses, especially against the likes of the AUD, the USD, right? Against the likes of, right? Even NZD as well. Those currency pairs, right, would be interesting, but not at the high levels that they are right now. If I can get deeper pullbacks, that would be interesting. If going to next week, the weakness in Japanese yen resumes along with, rising bond yield. So there's also that to pay attention to. You look at the likes of pounds, JPY, I mentioned it already, right? So that tells you that the upside we've seen has been massive. So nothing says that you can get some form of pullback. And every time we had that pullback, we definitely continued high, right? Every time. So there's also that to pay attention to. USD has been another interesting one, right? The upside has been really massive after we had this range. After we had this range for a bit, right? Going back to late January as well as the whole of February. After we had this range, we broke out to the upside. We've really continued to print fresh highs. Yes, the catalyst for the upside is still very much in play, but where we are trading right now is really high. I mean, we've not been at these levels for years now. Right? Last time we had these levels, let's look at it, was way back in 2015. So clearly, upside like this, looking for some pullbacks would not be a surprise, right? If we could get some pullbacks, I mean, I would really like to see pullback. Maybe back towards, we had one in today's session already, and we've bounced up. It went back as low as 23rd of February highs, right, around these levels, right? But in terms of convictions for the moves we have right now, I'm really, really short of that right now. So I'm really more patient. I don't want to look to jump into any of these moves that we're seeing right now. They're not really convincing enough. I know it's not just about taking a trade, it's about taking a good quality trade. So there's also that to pay attention to. On the dollar side, in as much as strength for the USD still remains, right, on the back of the hawkish and everly hawkish Federal Reserve, right? But in terms of right now, move so far, the dollar has not really, really given us so much work with this week. We've had ups and downs, ups and downs, ups and downs, for the week. So I'm being a little bit more prudent in my approach. I'm not looking to jump into anything, heavy just so far, right? For now, it's just going to be a cool one. You look at the calendar, for example, it's really, a light one. I mean, there's really, really, really nothing tangible to latch onto so far. It's a Friday. We could get more profit taking. We could get more, balancing. We could get more, pullbacks. And then the environment is overly mixed so far. So I wouldn't look to jump into anything heavy just yet. Next week will be another week, for more opportunities. But in the meantime, being more prudent is the way I would like, to play this out. So that's it for now. Thank you very much. If you have any questions, please don't hesitate to ask, and we'll always do our best, to help. Thank you. Do enjoy the rest of the training session. Goodbye for now.